Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into Bitcoin, taking a look at the recent price action and what we think is likely to happen next. As I get into this video, if you find it useful and informative, hit that like button, I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will stay up to date with all the video content that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this one, right? So we're going to be taking a look at two things. Pretty much like usual, smart money concepts and Elliott wave theory. And just for kind of clarity and kind of keep people on the same page, usually I kind of structure my days out with small time frames in the morning. That's what we're doing now. So we're only going to be looking at the hourly chart, which basically means I expect the plays to take a couple of days or so to kind of play out. And then in the afternoon, we'll be taking a look at the more macro views, which will take weeks to months to play out. Okay, just seen some comments where people are saying, it hasn't happened and it's wrong and all that kind of stuff. Well, essentially, you got to give it time on the macro, and on the micro, you got to be quick to it, right? So we start with the hourly this morning, and we'll be doing macro this afternoon. So let's start things off with the Elliott wave theory on the hourly chart here for Bitcoin, right? Following on from yesterday, where we were recording the video at approximately here, we were looking at a move to come down into this yellow box area. We did overextend deeper than expected. Now we need to check to see whether this is a problem or not. We didn't close outside of our yellow box area, as you can kind of see here, but my expectation is that we have further down to go, and I think this wick here is key to that. So let's go ahead and jump into it. Right, I'm just going to move this fib out of the way. I do need it. It's basically the measurement of this A wave. Okay, so what we'll do is we're going to check to see what's going on within this little structure right here. And we got close, but not on the 1.618. So I don't think it's a huge problem. We've narrowly avoided the 1.618 at this point in time. However, and there is a big however here, I'm going to just mark this up briefly, just with a dashed line. We're going to have to come down to 937, just here on the right-hand side. That'll be the fib level, 937. Okay, cool. So I'll get rid of the fibs. We know that this dashed line right here is basically our 1.618. In fact, I might actually just go ahead and bring in my text, 1.618. And then what I'm going to do, let's see, where is it? It's down there, yeah. I'll save this as a template. Why not? Save as 1.618. Save. Cool. Okay, so we have our 1.618 just here. And so if this is a 1.618 to make this whole thing, an impulsive structure, rather than just corrective, we'd have to go 1, 2, all the way down here, 3, 4, and 5, right? So that internal wave 3, this wave 3, would have to have an internal wave count of a 5-wave structure. And this is why I talk about this particular area at 26,909.37, because it does look like we have the potential for a 5-wave sub count. So let's sense check that. I think it's going to be, yeah, this low, this high, over to here, and we hit the 1.618. So the internal count, let me go clear this up. Okay, it looks like this. So we have this move coming down. At the moment, we're just a B wave, but I think that might be incorrect. So inside here, we have this initial push up, then we have this move. So we come down. It's actually about to here, this one. 1, 2, 3, 4, 5. Here, 1, 2, 3, 4. Got to come down into the 5th. And if we do this and we come down, then we can articulate that what we've got going on is a big 1, 2. All of that would be 3, 4, then 5. And we'll probably lose this low at 26,578. Okay, so we're going to keep an eye on that. Now, for the most part, I wanted to go long. I thought a long would be better, but I think we have to come down before we can go long. So I'm thinking we're probably going to have to kind of wait for confirmation or completion of all of these moves. So a short position might be better for a little while, but we'll see. I don't think good entry is here at the minute. So if we're going to come down, I'm going to measure this distance, and we're going to go somewhere between the 1.236 and the 1.618, puts us right here, lower than our 1.618 target right there. So we're looking at coming down to 26,599 to 26,847 within this 5-wave count just here. And then I would expect us to retrace up, let's just take midway here, to 38.2%. So to go back up to about 27.5 approximately. I'll just put a little box in here. Approximately around here. Get rid of that. It's a bit hard to say until we complete that 5th wave. But my expectations would then be, if I go ahead and change the degree to this to minute, then come down here, 1, 2, 3, 4, and 5. Change these ones to immediate. You can then see 1, 2, 3, 4, 5. In here, we would have a little sub count. I'll make it yellow so you can see it's different. We come up, so I go back down. And if we go from our mid-level here to, let's say, the mid-level here, our final 5th wave will be somewhere around here, 26,002, 26,005. And then, of course, we've completed a 5-wave structure. Now, that 5-wave structure, it would take us lower than this, 26,578, which would create an invalidation of my structure to the upside here. So you can kind of see how the most recent kind of candle formations have changed our analysis, because I thought was going to be an upward directional move has now changed. And the reason for this, it could be a couple of different things. One, I thought this would be an expanding, irregular flat based on this 5-wave structure here. This can still be zigzag, and this could just be a couple of corrections. And the big issue then becomes, how deep are we going to go from here? Okay, so we take this, this move over to here. Are we going to get an overextension within one of these? It takes us down to 25,919. And because then, if we do, we have a 1, 2, and a 3, 4, 5. Let's change this back to white. And come back in here. We'll go into an immediate. So you can kind of see we potentially are on an impulsive structure. Potentially. It's not a guarantee, but there's a potential move in there. And then we should be kind of concerned about that. So for the most part, we've got these kind of interesting zones. We'll remove this one for now to be thinking about. So on our smaller time frame, I can get rid of this one now as well. On our smaller time frame here, what is it that we're thinking? Well, we've got to think that we've got to come down. Okay, we're looking to kind of bring our stochastic RSI down towards the oversold area before we bounce up, and we'll be looking at about 26,599, 26,847. Okay, that's going to be my first expectation. Once we get down into those lows, my next move would be to the upside, probably over tomorrow. That would be 27.3 to 27.5, and then we come down one final time to 26.2 to 26.5. Okay, that would then finish off that first 5-wave structure, where I would then anticipate that we'd have a bigger corrective structure upwards, and that will be the long that we'll probably are waiting to kind of see. So my expectations are we can either go short around here with a stop loss above the wave 4, and bring this down to mid-level. Look for anything above 2.0 risk-reward ratio. Alternatively, wait for this wave 3 to complete and go long from our wave 3 ending up to a 38.2% retracement, keeping our stop loss just below the swing low over this side, or wherever the wave 3 is. This would actually be a risk-reward ratio of about 5.3, which would be much better. And then again, we can short the market from wave 4, with our swing, putting our stop loss, on the wave 4 high, so we shouldn't go any higher than that. We could probably, actually, if you want to be really, really safe, put it above the wave 1, and then, which actually is over here, so wave 1, so you could put it about here, because wave 4 is not allowed to cross wave 1 under an impulsive structure, so that would create an invalidation, and then put our stop loss down, our take profit down here, and a risk reward ratio of 3.1. So we can see that there's a lot of potential in here to kind of trade this on the smaller time frames. And if you are a trader, why not check out Bitget, linked in the description down below. It's the go-to platform that we're using at the moment, not only for spot trading, but for also leverage-based trading. They do some fantastic offers at the moment as well. So why not take advantage, right? You can get up to $8,000 in deposit bonuses and rewards through tasks and things like that. They also do cashback offers at the moment as well. Deposit $50 USDT and get $10 USDT. And they also do a load of lucky draws as well. So why not check it out? Linked in the description below. I use Bitget all the time for everything that I'm doing trading-wise. And again, you can kind of see here that we can quite easily kind of take profit in multiple different areas just on this 1 hour chart over the course of the weekend. These are my expectations. Now, it might just be that we grind slowly over the weekend, but I think we'll see a couple of violent moves upwards, as I think FOMO from retail investors will be stronger. Let's jump over into smart money concepts, right? So what did we see from smart money concepts over the last little while, and is there any way of kind of looking at this and thinking that we're going to be in kind of confirming what 𝗕𝗘𝗪𝗧𝗧 theory is kind of suggesting to us? And well, we do have this bearish change of character. It's a minor one, but we can take a look at it right there, and we have moved back down, bouncing up. So we are in a bearish state on this hourly chart for now. So again, that works for us. We are below the equilibrium, just getting rejected from it. So expectations are that we're going to be moving down. We do see that the we have a strong low in this discounted range down here, and we do have a weak high. So the expectation is that we'll eventually break up higher, but this is because on a macro scale, or slightly higher scale, I should say, we are bullish, and that hasn't been broken yet. Okay, but I do think that will break if we come down lower than this current swing low. So we kind of bounced up, and then we're going to get a change of characteristic if we break that existing low down here, which for the record, if I go ahead and throw that on there, is 26,601. Okay, so if we come down lower than that, we know that we're going to be breaking our structure, and I do think there's a high probability that we will do that. Okay, so that's kind of changed in the last 24 hours. Ultimately, we found brief support on our 200 EMA, but we are below the 50 EMA, and essentially I think we're kind of getting ourselves sandwiched up in here. We have got an internal order block just below us right here, this green one, and we've got these red ones up here for sellers. So we can argue that actually all we're really doing here is ranging in between the discount and premium ranges for smart money concepts. There is no fair value gaps here. They were all filled out, so we did see some, okay, and they got filled. As you would expect. We still have to fill a lot of these ones that have been stacking up for quite some time. So again, I'm expecting that we will essentially see some kind of bigger move to the downside. But I do expect us to be bouncing around a little bit here. So as I said, if we are setting ourselves up for a big wave 1 here, well, wave 2 will retest these highs at around 28k, possibly, and then break on down into probably 25, 24k pretty quickly from there. I think it's going to be interesting to kind of see how that all plays out. What fundamental news is going to kind of spur on fear in the market. There's going to be something. But from a smart money concepts point of view, it looks like there's no institutional players at the moment participating in this recent price action. So just watch out. At the moment, we've kind of filled back all those fair value gaps and those imbalances. We're looking to move back down, in my opinion. 𝗕𝗘𝗪𝗧𝗧 theory and smart money concepts are both in bearish states. So for the most part, yeah, that's kind of where that sits for me at the moment. If you found this useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe. Don't forget to join us in Discord. Check out Bitget and join our weekly trading competitions down in Discord as well. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.